Peace, welcome back to another episode of the Money Codes. My name is Joel, here to give you today's money code fix. And if you're not hip to the channel, we talk about credit repair, credit building, how to leverage your credit, all things personal finance. So if you're not tapped in, make sure you go ahead and like and subscribe. So let's not even waste any time. Let's jump right in. So today's video, I want to go over a company. The name is Seedfi, right? They're a FinTech company called Seedfi. You may or may not be aware of them. They've been on my radar for a little bit, but I've yet to do a comprehensive deep dive on what I think of the company, what I think about what it is that they offer, who made this company before, and how they stack up with other credit builder type of programs that are already on the market. So let's scroll down. Let's see what this company is all about. So if you scroll down to the middle of the page, if you're following along with me, there are 3 plans that they offer. One of them is coming soon, so I'm not really going to talk about that right now. But the main one that is probably what's going to be on most people's radar is the credit builder plan, right? This is great for building credit, growing your savings, getting ahead. So what do they mean by that, getting ahead? Is this like some marketing speech? Is this, what are they talking about with this? So I'm jumping over to CNBC right now, and you can see this is an article 2019. A $1,000 emergency would push many Americans into debt. Most people will be in a bind if they missed even one paycheck. So for most Americans, it's already a little bit challenging to try to stay ahead. It's a little bit difficult to be able to not only build your credit, but also be able to keep something tucked away in case of an emergency. And to me, this is why I really like these credit builder type of plans. This is why, if you look on my YouTube channel, there are quite a few videos that I have that are discussing this, because to me, I think it's important. It's important not only to have a good credit score, and this is what these type of companies can do for you. In my mind, I feel like we're incentivizing ourselves to save some money as well as build our credit. So how does this work? Let's click to learn more. It's very similar to what you've already seen before in this space, but there are some differences. There are some little things that I think are a little bit beneficial for those that are looking for a credit builder plan and you haven't pulled the trigger yet. So set aside as little as $10 every paycheck. You can do this either monthly or bi-weekly. You're going to build credit because we already know the very fundamental of credit is we need to have positive payment history reporting to our credit reports every single month. That's the biggest thing that we can do to get our credit right, is to have something that's on our credit reports that reports every single month that says we're paying on time, we're paying on time, we're paying on time. We need that. And then at the end of this loan, you're going to have access to receive the money that you paid in. So what does that look like? Let's just scroll down. So the $500. So when you sign up for this account, they're going to take $500 and they're going to put it into a savings account that you cannot touch, right? They're not going to cut you a check. You're not going to get $500 cash in your pocket so you can go and buy some groceries with. This is not what it's about. Similar to like Self, similar to Credit Strong, similar to other more popular credit builder type of programs, they lock that away. So you cannot touch it. It's going to report $500 to your credit report. And that reporting is going to slowly build your credit profile. It's going to make it stronger, but you're not going to get access to that $500 until at the end of the loan. And they always say, if you go to any of these websites, you know, the average increase that they've seen is 40 points or 60 points. The thing with these type of companies, yes, there are people that are able to get 40 points, 50 points, and even higher. But those type of people have a specific type of credit profile, meaning their credit profile is very thin. There isn't much reporting on their credit profile anyway. So if you're able to get a Seedfi account, if you're able to get that account, put that onto your credit report, have that reporting every single month, those are the type of people that are able to see a big increase in their credit profiles. But it's not a guarantee. It's not a guarantee that you're going to see a huge jump in your credit score. However, it is very common to see an increase over time with these type of accounts. But like I said, 35% of your credit score is, do you pay your bills on time? And these type of accounts help with that. What does it cost? So this is where I see Seedfi. They are making it known how they're different from the other companies. So $10 to $40. It could be every month or it could be bi-weekly, depending on how you set it up. And it's only going to cost you $1 per month in order to partake in this program. Compare that to Self, and I think this is a good time to jump over to Self because they do very similar things. However, and let me scroll down to make it as similar as possible, because if you do the 24-month with Self, you get $520 that you'll get back. But the key for Self and why they're different than Seedfi is if you look into how much you're really paying. For Self, they have a $9 non-refundable admin fee. That off the rip is worse than Seedfi because Seedfi, they don't have an admin fee at all. With Seedfi, you're not paying anything but $1 per month. Compare that to Self. Self, you have finance charges, $89. You're having an interest rate of 14% over the term of the loan. So it's very similar. These accounts, if you can wrap your mind around why Self is popular, Seedfi is very similar. They do not have nearly as many, again, admin fees, high interest rates. You're paying $1. And if you refer this plan to a family, a friend, a coworker, that $1 gets waived. So essentially for free, you can add a primary trade line onto your account that's reporting every single month. That's also going to allow you to save a savings account, $500 worth, that you'll be able to take back at the end of the term. To me, I think that's a no-brainer, right? So this is how it will look. $500 for later. Again, you're not going to be getting cash up front. They're not going to be giving you a loan that you can spend immediately. That's for later. That's tucked away. You don't get anything now. You're going to pay $20 every other week or once per month, depending on how you change the settings. How much is this going to cost? Only $1 per month. So at the end of the 12 months, you would have only spent $12, right? Only spent $12. That is way less than anything else that is comparable on the market after 12 months. This is the credit builder plan. This is why I say it's very interesting. If you haven't pulled the trigger on a credit builder plan yet, if you haven't jumped on anything yet, I highly recommend that you look at Seedfi. Check them out. The only knock that I can give them right now is if you scroll to the very bottom, where it says where we operate. Currently, they do not offer their plans in all 50 states. I would highly recommend that you just take a second and just scroll down. See if you're living in a state where they're currently operating in. You may or may not be able to actually use the service. That's the only knock for right now, but I do see them actively growing that area of coverage. And then lastly, the last thing I want to show you is their borrow and grow plan, which to me is like a hybrid. This is a hybrid model. So if you're somebody that's saying, okay, I do see the advantages of, building my credit. I do need a primary account on my credit profile. True. But you know what? There's also an emergency. I need some cash in my hand to pay off this, whatever, medical bill or whatever the instance is, right? They have something called the borrow and grow plan. And very quickly, how does this work? This is a hybrid. This is slightly different than what you will see from the previous plan that we just went over, as well as like yourselves, because Self is not going to give you in any capacity any cash up front. They're not going to give you anything like that. So how does this work? You borrow money that you need today, plus some extra for later. Number two, you build credit with every on-time plan. And then when you finish paying off your loan, you'll owe zero and unlock your savings. So let's scroll down. Let's look at this. I think this is the best way to look at it. So let's say you are approved for a $4,500 loan. How would this look? In this example, you would get $3,000 up front, and then you would have $1,500 that is tucked away for later. It's tucked away just like how Self does it, just like how Credit Strong does it, just like how we discussed before. It's tucked away for later. And you're going to pay $80 every 2 weeks or every time you get a paycheck. And then the APR is 19.99. And again, these type of rates are very good when you're considering who these type of plans are for. These are for people that They need a second chance. They need to get back on their feet. They have a very limited credit profile. They don't really have much to show. They don't have the best of scores. To be able to get a loan and have something in your hand and you're still paying less than 20% APR, I think that's big. I think that's big. And I haven't seen a plan similar to this that actually has better rates. Again, I'm going to keep doing different videos, different updates, but the cost for their services, that's where they're placing their flag. That's where they're stamping themselves. They are the credit builder program for those who are on a shoestring budget. They are good when it comes to that. I'll give them that. Again, if you have not decided to pull the trigger on any sort of credit builder plan, let's say you're still shopping around, you're still trying to figure out who to deal with. Most people would also probably look at Kikoff. They're also kind of in the same niche, but with Kikoff reports as an unsecured line of credit. You spend about, I think, $2 a month. There is no upfront fee, and then they're going to report a $500 unsecured line primary to your credit report. You're not going to be able to get that $500 back at any point. It's just going to report to your credit report. That's all it's going to do. And people still do see increases with their credit scores. But how does that change from SeedFi? With SeedFi, that $500 at the end of this credit builder plan, you will get back at the end. When you're done, when you pay the plan off, you will get that $500 back. You're not going to get that with Kikoff. So again, you have to really look at the pros and cons for each one. But if you're looking for something to build your credit as an incentive, save some money on the side while building your credit, I will highly recommend that you look at Seedfi. They look very good to me. Just make sure that you are in the state where they offer their services, because you may be out of luck for the time being. But that's pretty much it. That's all I got for you. Hopefully you got some gems out of this video. If you did, you already know what to do. Please go ahead, like and subscribe. Go in the comments, let me know your thoughts, and I'm going to check you out in the next video. Peace.